Germany's central bank has brought back much of its gold to Frankfurt, the Bundesbank said Wednesday. Who cares, you may ask? Well, the bank has done so ahead of schedule, leaving some like my guest today, Vince Lanci of Echobay Partners and the editor for marketslant.com, to think it might mean something bigger. Vince, good to have you back on the show. Thanks for joining us.
Thanks for having me.
So Germany brought back 674 tons of its gold, to be exact. Why the move, Vince, and why did it take so long, even though they are ahead of schedule now?
You know, I like how the mainstream media is all about patting themselves on the back or patting the Fed on the back for getting it back to them ahead of schedule. We should remember that in 2013, when Germany initially asked for its gold, speaking about the U.S. Fed, the U.S. Fed negotiated a 7-year repayment plan. So we should be looking more at the fact that they couldn't get it back sooner rather than later, and not complimenting them on their prepayment before it was due. That makes any sense.
So what, I mean, just to give some background, why did the Germans want their gold back? They have it, stored, some in London, some in Paris, and they still have some here in New York, over 1,000 tons. But why did they want it back?
Well, after the financial crisis in 2009, you started seeing many European countries want their gold back. The Dutch and the Germans amongst the most demanding or wanting it back as soon. Venezuela started it off, even though they're not European, and they wanted their gold back. And then Germany stepped in and they said they wanted their gold back. They took back about 940 tons from the Bank of England before 2013. And if you want to put it in one sentence, I think the Dutch Fed president at the time said hold on, I have the quote here. In times of financial crisis, we prefer to have our gold close at hand. And when you look at how it started, this whole thing started because they were more concerned about control than ownership. They may have owned the gold, but they want to see the physical close to them.
Now, as a counter argument, Vince, a lot of people I spoke to said, look, there's nothing fishy behind the move. It takes this long to move gold. It's not something that's easy to move from one country to another. They are a lot of tons we're talking about here. And so it does take this amount of time to move.
False. Not true. The physical reality of it is that, yes, you're dealing with something heavy that has to be moved, and it has to be put on a ship or a plane or however they're doing, and it has to be moved. So it does take time, but that's not. You don't need 7 years to move that much gold. To give you some perspective, in 2013 we started the clock. In 2013, the U.S. sent back a paltry 5 million tons. And they blamed it on logistics, which is not true. If you want to call it logistics, then blame it on the fact that the delays over the 5 years were because the gold had to be remelted. And that calls into question, wasn't the Bundesbank's gold segregated? Why would it have to be remelted? To answer my own question before putting my tinfoil hat on, you do have to make sure that the gold is up to standards, and perhaps some older bars were not at the purity level they needed. But only 5 million in 2013.
Right.
And then 2014, 85 million, and 2015, 190 million came out of the Fed. So do not tell me it's because of logistics. It has to do with sincerity.
So Vince, don't hold back. What do you think is really behind it? And again, I just want to repeat, there are still 1,000 tons that they're keeping here in New York, over 1,000 tons.
Yeah, I think that's a really good point to make. I can get into what I think the Fed shenanigans are as good as anyone, but I think to put a really fine point on what you just said there, when you compare the percentage of gold that's been taken back from the U.S. Fed versus the Bank of England, they've taken back 300 out of 1,500 tons. The Bank of England, they've taken back 940 out of 1,300 tons. So, yes, there's concern. Yes, they want their gold back, but they are still geographically keeping more gold in the U.S. For geographic reasons, I mean, than in other countries.
All right. Moving on to another big news event of the week. Jackson Hole is coming up. Vince, do you think it'll be a big market mover here for gold? What's your take?
I think news events and Fed speakers have had bigger surprise moves in gold than in the past. And I think that's because you're getting more hot money, especially from Europe, and funds that are chasing the market a little bit. I would say, unless we sell off in a big fashion before Jackson Hole, lately it's been seeming that every time someone in an official capacity, central banker type, opens their mouth, whether it's bearish or bullish for inflation, gold is actually firming up. So I discount what they say is insincere, but I've been seeing the surprise reactions higher more than lower in recent speaker events.
So you're frustrated that gold's come back down from 1,300 after we finally hit it last week?
Well, as a biased trader, yes, it's more fun above 1,300 than below. I am very suspicious at this level, and I think I wrote a post on it recently that 1,300 puts us in the headlines. And when you have gold in the headlines at 1,300, you get retail mom and pop buying futures, and you get momentum funds buying on headlines. And that's a good place to sell if you're a fundamentally long trader who's been long for 6 months. Like, for example, the Friday activity is very scary. I think there's a lot of trapped longs above. I'd like it to clear 1,300 and stay above it for a day before I get excited.
All right. Vince Lanci, editor of MarketSlant.com and the founder of Echobay Partners. Thanks so much for joining us.
Thanks for having me, Danny.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.